Exodus Corporation, the publicly traded company that has been famously known for stealth custody, had been working with an infrastructure called Shapeshift early on. Now, I believe this moves Exodus into the next era as they have acquired Monavate, which is a broader company that owns a bunch of fintech infrastructure. According to the press release, this gets Exodus access to the Visa Mastercard network so that they can start issuing cards as well as control the onboarding process. In my opinion, this is kind of the final form of most crypto companies that want to play in this space. We've seen Coinbase essentially move into this same position. I believe Kraken is going to be in almost exactly this same position when they go public. I think this puts Exodus squarely in competition with the likes of Coinbase and Kraken. Lucas, what did you think when you first started having a chance to look into these press releases and announcements from Exodus?
I mean, I was very impressed. You didn't mention that Exodus is publicly traded on the New York Stock Exchange. I've thought that was also a big move by Exodus. More reason to keep an eye on them, notwithstanding some of the other T0 attempts that they've made. I think when you say this is a final step, I think you're absolutely right. You know, the big problem of crypto is the on ramps and the off ramps. So access to the Visa Mastercard networks is um, is very important. Um, you in your summation of the history of Exodus, you mentioned Shapeshift,
Yeah,
and
that was the infrastructure for doing swaps
yes,
that
can you
they partnered with.
well,
Go ahead.
and they, I mean, can you go into some of the detail in the history of Exodus with regards to Shapeshift? Because I know you have a lot of knowledge, little experience of that time at Exodus. And you started with Exodus defined as a self custody focused wallet. So how did they make what sort of conversations were going on at Exodus thinking about how they wanted to grow in the future?
Okay, so take it in two parts. Shapeshift was the infrastructure around which Exodus provided access to doing swaps. So atomic swaps were the kind of thing that Exodus wanted to play in the space of. It doesn't work that well if you don't have access to liquidity. So you've got to be able to have somebody that's backing that with coins that people want or are willing to take the trade. And so that's the infrastructure that Shapeshift provided. It was a mechanism whereby you could swap between two different cryptos. Didn't necessarily give you any access to on ramp. It wasn't a place you could bring fiat and then get coins, but if you already had coins, you could move from one to another. So very frequently, what would happen is you'd come in with Bitcoin or Ethereum, and then you'd be moving into some other kinds of coins that were supported on the platform. The onboarding was always the holy grail at any wallet company, and was also true at Exodus, that if they had access to an easier way to onboard and on ramp into the crypto space, then that allows you to have a broader appeal. It allows you to access a wider market, because otherwise, before somebody can use your product, they've got to go do something else. So they've been experimenting with different ways to on ramp. And when I say that this is the final form, it's because controlling this entire vertical stack is a really important step in not having some other company control your destiny. That other company could get debanked, they could have some kind of problems, and then suddenly you're stuck holding the bag without any ability to continue to operate your platform without trying to sub that in some fashion. So once Exodus acquired this company, they now have their own mechanism for on ramp, but they also have a way that they can interact with the broader world, which is the Visa Mastercard payment processing infrastructure. So now you can take your fiat, you can get into the crypto space, and then you can use that crypto ubiquitously in the world because they're going to provide those rails of how they can interact with the rest of the world economically.
And did you was it a surprise to you to see this agreement between Monavate and Exodus?
Ask the question one more time, please.
Were you surprised to see this agreement?
Well, I think they were working with them before. So I one of the things that you do when you become a publicly traded company is you have enough cash that you can start doing bigger things than what you could have when you're a privately held company, because otherwise you're just working off of the capital that you're able to acquire through profits. But when you become publicly traded, now you have access to the cash that's provided by the stock sales, and now you can do these bigger moves. I think this type of a move is what everybody anticipated when Exodus went public, that they would now start to be able to do some things that before they would have had a harder time doing without access to more cash. So that would have either been maybe through private equity or some other mechanisms. But when they went public, they suddenly had a whole pile of money to do something with, acquiring a fintech infrastructure, on ramp, and the ability to issue payment cards. That seems very natural to me. So I'm not surprised at all. I didn't have any sense that they'd be working with Monavate or Baanx. That it seems logical, but I didn't have any pre-knowledge. No.
Well, part of the reason I ask is because I thought that that we would see um, traditional fintech companies actually acquiring the likes of Exodus before we saw vice versa, and and that could still be a possibility. I only say that because um, the credit card system, the credit card companies were taking a hit politically prior to a focus drifting on what everything that's happened in the Trump administration. But I don't know if you caught the House hearing probably 2 years ago now, whenever they dragged the credit card execs and were asking them um, about some of their interest rates and some of their profits. Um, and so uh, that's the only thing that caught my eye. I was surprised that Exodus acquired rather than was acquired, and it was interesting. I thought that interesting with regards to, I don't know, the power balance, but I think it also maybe goes in flow with Exodus seems to be um, a very focused uh, to they seem to have a vision that they are chasing. Put it that way.
And if you recall during the Trump uh, campaign, Exodus was front and center on a bunch of different events that occurred. So they're well known to the Trump administration. They were around. They were splashing their name all over the place as we had those crypto events in the gala of last year, if you recall, when that occurred, all the excitement around the Trump campaign win, and then we had all the crypto folks gathered together, and Exodus's banner was splashed all over the place. So you can definitely see that they have aspirations to being a major player in the crypto space.
Absolutely, and I've also thought that the Trump administration is going to be turning their focus a lot more into educating people and bringing crypto. Uh, and I think for a number of reasons, I don't know if we want to get into those today, but I think that they will be bringing crypto more directly into the fore um, uh, for various solutions for America. But we've also still seen that Operation Choke Point, that some banks may be perpetuating some of the ideas of Operation Choke Point behind the scene.
Well, this is exactly why you want your crypto company to have vertical integration like this. That prevents it from happening. I mean, Operation Choke Point and what was happening with debanking is one of the primary fears that you have when you're working in this space. Is one of the days you're going to wake up and you're going to have the rug pulled up from underneath you. This happened to Jack Mallers just very recently. I would not be surprised if Exodus doesn't start shopping around their ability to bank a variety of different companies in the crypto space, from people that are selling mining equipment to anybody that needs to have access to the traditional financial rails. That's essentially what Exodus has now acquired and has the ability to do. To the extent that they actually start doing that, I have no insider knowledge about it, but I would not be surprised at all to see them go bang on the door of Jack Mallers and say, "You just got debanked. Hey, why don't we lend you a hand here?"
So you think Exodus is going to move into not just using banks and Monavate for on ramp off ramp into crypto, but actually provide commercial banking services?
I absolutely think they will, to being a crypto friendly bank infrastructure. Yes, of course,
Interesting.
especially for the more reputable ones. I think that they'll be picky and choosy and very judicious about what they do. I know that Exodus caught some flack for when they dropped Monero. There was talk that somehow Exodus had lost its way and was no longer supportive of privacy coins or something like that. But the the Monero infrastructure is expensive to operate, and if there isn't a strong incentive to continue to support a coin, we've seen Exodus drop coins before, and they have a very strong calculus for whether they include something as an asset that they want to support. They're not just the Swiss Army knife of crypto, but rather they try to support those that actually have a user base. It's one of the reasons why Exodus has repeatedly said that they are not supporting Chia, because they just don't see that there's enough volume on the chain. So when Monero got dropped, they were dropping an expensive infrastructure to continue to support one that generated most of the support tickets at Exodus, and there just weren't that many people using it. So despite Monero being perceived as extremely popular, the boots on the ground evidence from Exodus is that it isn't as popular as some people may have hoped it was.
I also when I saw this announcement, I thought about Exodus dropping Monero, and I couldn't help but wonder if um, they also were getting rid of maybe one of the shadier cryptos, as they were negotiating with traditional finance companies who might not have the highest opinion of Monero. Um, but I doubt they would admit that if that was part of the calculation.
I don't think it was. It's not pressure from anybody other than the internal calculus at Exodus about, what assets are we supporting and how much does it cost us to do it versus how much flack are we getting for stuff that isn't even our problem. I don't know how much you know about doing a self custody of Monero, but what you have to do is you have to sync the entire Monero chain, at least from the start of your wallet, and you have to do it over a Tor browser. So you essentially have to leave your wallet unlocked and logged in for hours and hours, potentially days, before you can even see your Monero balance. And if it gets interrupted or if it gets corrupted during that process, then you have to wipe, put your keys back in, do it all over again. I mean, it's a tremendously onerous process to work with Monero in a privacy protecting fashion, and that's what Exodus had supported. It's not just using a centralized node. It actually forces you to have almost all the blocks there on your device, which means you also need to take up gigabytes of space to have the entire blockchain locally. It's a lot to make it work, and I understand completely why they decided to move away from the space, especially considering that the Monero enthusiast community is using a different wallet. So it's not that popular amongst Exodus users. It's onerous to operate, both from Exodus's perspective and from the people that run the wallet themselves, it made sense to me that they got rid of it, although I lamented it because I have always been a fan of Monero.
Well, uh, that sounds much more onerous than I would have expected it to be. So um, maybe my conspiracy theory is off base. What else? What else do you think this acquirement of Monavate will bring to the table for Exodus?
I think you're going to see Exodus as a wallet and as a app being used for doing more payment style things, getting coffee at your local coffee shop. They've talked about how they plan on integrating stablecoins as one of the primary ways that you would do this. So I would anticipate that there's all kinds of things that might be occurring here, from accessing staking infrastructure inside of Exodus, taking payments and having those payments automatically going to stable coins, and then being able to pay with standard purchasing rails at whatever points of sale using NFC integration with your phone to be able to spend the stable coin interest payments from accessing whatever fintech products. I think that's essentially what they're going after here, as well as probably still being in some position to issue physical cards. While that still is a thing, I think in the next few years we're going to start to see the physical card part of doing payments almost completely replaced with phone-based payments. So that's something that I'd anticipate seeing here as they continue to move forward, is more integrations or even a new app potentially that would be interacting with Exodus that is completely focused on doing payment style stuff, but having a seamless integration between the two apps, or some sort of an integration with the Exodus wallet. But I'd be surprised to see that, honestly, because I think they might want to keep the whole idea of having a self-custody infrastructure kind of cordoned away, in much the same way that we've seen Chia Network Incorporated make their Signer wallet app. It's this kind of splitting it into multiple different pieces allows you to have strong security concerns in one area and then focus the app in a very particular way. So I wouldn't at all be surprised to see Exodus launch an app completely devoted to working with the fintech rails, and probably taking a lot of what they got from Monavate and Baanx as the basis for how to create that app or how they want to do it. The thing about Exodus that you should remember is that it's a very user interface focused company. That was a huge part of what Exodus's internal identity is that they're creating a really simple infrastructure and a really beautiful app, something that makes it easy for the average person to be able to get access to. And they think really hard about it, and they work really hard on ensuring that the app is easy to use and is friendly. So splitting it into two pieces and giving a very specific audience access to crypto and doing payment style things would seem to be a very natural fit on something that I'd expect to see next.
When I think of companies that that I don't know if I want to use the word threaten, but who have traditionally provided services that that I'm imagining Exodus is looking at on the consumer end or user end. I think about PayPal. On the commercial or business end, I think about Stripe. Do you think this is are they going to be focused on one or the other as they bring this association to the market, or is this going to go is this going to be directed at both consumers and businesses on entrepreneurs, or
I'd expect to see Exodus starting to move in a bit to that Stripe space. I think Stripe has traditionally been playing in these waters and has been dabbling with crypto, and so this makes Exodus very competitive to that. If you see Exodus actually move into creating physical pieces of hardware that can plug into a tablet to enable point of sale, I think that's when you would start to see a really interesting growth trajectory for Exodus. They could start to eat that lunch. Shopify is probably the other company that I would keep watching in this space, is to see when and where they start getting much more serious about crypto and adopting crypto rails as an alternative mechanism for enabling payments or for being able to do very interesting things in the crypto space. So I think this puts Exodus into competition with Stripe and squarely either puts them on a trajectory to intersect with Shopify or start working with Shopify.
And do you think that will be their focus? Because I mentioned PayPal. There's also Coinbase. Coinbase is another method. I think a lot of people on off ramp their crypto. So do they look at that as maybe already a bit saturated whenever they're thinking about becoming the portal for people's experience into crypto?
It's saturated, possibly. I think there's a lot of competition in this space. There are a lot of companies that are chasing this same idea, especially given the new emphasis and regulatory infrastructure that we got from the Trump administration around stablecoins. As these start to become much more ubiquitous and accepted as the way to do traditional style commerce, I think we're going to start to see a lot of players enter the space, try to grab for market share. This sets Exodus up as equal footing. So I think that there is a lot of competition in the space, and I think you probably even see Circle moving down in the stack as well. Like they already are one of the premier stable coins and stablecoin issuers. I wouldn't be surprised to see Circle move down one layer and say, we want to try to capture more of this. So I think that there's going to be a lot of churn in this market for a while as we start to see one or more companies begin to acquire or get gobbled up by some of these bigger companies, and we start to see the dominant player arise.
And how do you think this affects Exodus's security profile? Does opening up these avenues for what is possible for their users, is this going to negatively affect the amount of security that they bring to holders of crypto?
I think this is one of the reasons why I would expect to see them segmenting their product into different applications directly to try to preserve their users' privacy and anonymity. That is one of the core tenets of what crypto is about, and Exodus has always embraced that. So I'd be surprised if they don't find creative ways to cordon off the KYC portions of what happen in the Exodus ecosystem to a very specific slice and try to keep that separate from things that happen downstream, or even in their privacy statements or terms of service to say that they won't cross correlate and that they'll dump certain types of logs to try to preserve that. I'd be shocked if that isn't the way that they operate, because that's been inside the Exodus DNA since its inception.
And do you see any other windows for opportunity that they might be uh, building another application or aiming that we haven't brought up yet?
I think just to the extent that the companies that they're acquiring already had some of that stuff. I mean, I think one of these companies, Baanx, even had their own token. So to the extent that that token is still going to be supported, or whether it's going to mean anything after the acquisition, um, I think that that's my strongest indicator that they would try to continue some of that tech in some fashion to achieve some of these goals. So that these companies already had apps, infrastructure, code in place. To me, I think it always makes a lot of sense when you acquire a company to try to preserve as much as you can. And I wouldn't be surprised at all to see Exodus try to preserve a lot of that infrastructure and not integrate it in a substantive way other than thoughtfully. You know, it's like one thing to acquire different pieces of technology and then try to mash them all into one big code base. The other thing is to try to find what's really good about the companies you acquired and enhance them and try to make the integration points much stronger. And so since Exodus was already doing a lot of that kind of stuff, this feels like a natural fit that they would leave a lot of that infrastructure in place, which would also allow them to take a bunch of KYC stuff that had crept into the Exodus app and just move it straight out. Because in some sense, before Exodus acquired these companies, they needed to integrate pieces into the app so that they didn't drive their customer base to a different place. But now they can say, if you're going to do KYC and on-ramp stuff, you do it over here, download this app, and then you withdraw your coins or you set your address where you want the coins delivered to, and you put it here. And even enabling that in a privacy protecting way, you could imagine something like silent payments being the more de jure way of integrating with Bitcoin. And now that Exodus has the ability to do this across the board, they could be doing these integrations in extremely thoughtful ways. So that's, I think, the way to address the security concerns and also to preserve as much as they can from the companies they've acquired.
We started this conversation talking about the swaps in Exodus, and I'm not sure if any other wallets have the certainly the sophistication of the swaps inside the Exodus wallet. Wallets, I'm not sure how many avenues for making money wallet companies have, and I assume that Exodus is largely from fees that are generated through the swap mechanism.
That 100%, that is exactly how they've made their money. That's why crypto wallets are so notoriously difficult to contemplate as a small player. It's the money loser unless you have some kind of an exchange infrastructure where you can make money. And if you're not prepared for the regulatory burdens that come with operating something like that, you either operate outside of it and just roll the dice until you finally get picked up one day, or you get dragged into court because the East District of New York decides to come calling, or some other thing precipitates you getting in trouble in some court system or some jurisdiction. So Exodus has always been making money that way, and if you look at their quarterly statements and their publicly facing financial statements, it pretty much plays out that they're making all of their money from operating an exchange.
Well, and if we think of Exodus not as a wallet but as an exchange, one maybe I should have been thinking of them as an exchange and not as a wallet whenever I was thinking about this integrate, who eats whom whenever it comes to traditional or financial tech companies. Because when I think of the power and the possibilities of exchanges, they have a much greater avenue for revenue than a wallet. Do you think that
but what changes here, because Exodus is acquiring the payment card part of this, now they get to collect that 3 to 4% fee, or 1%, or however the credit card companies cut these deals for being able to issue cards and accept payments. That's the next piece that they now get, which is a massive amount. If you think about exchange fees driving revenue, it's one thing to get money every time somebody moves between two cryptos. It's another thing entirely to say you can now use our infrastructure and our applications to do general purpose purchasing, operating in the space where credit card companies have traditionally been playing. And that fee infrastructure around credit cards is one of the biggest places to make money in volume. So that's something I would expect to see from Exodus, is a broad increase in the amount of revenue that they're bringing in outside of just doing the swaps and exchange.
Do you think they will start to that the consumers will see lower rates when it comes to the transaction fees, or is Exodus going to are they going to use a fork, the same size fork as the traditional credit companies have been using?
I wouldn't expect to see lower costs for consumers necessarily as a result of this. I think that this is more growing revenue for Exodus rather than trying to, in some way, broadly bring down costs for consumers. That doesn't seem to be the play here. The play here seems to be they're acquiring a company so that they can increase revenue, broaden the way that people use the products, and get access to a substantially larger portion of a bigger market. That's what this seems like to me. I don't expect to see any lower costs for consumers yet.
Well, maybe I was dreaming a little bit there, but again, before in the Biden administration, there was a lot of political pressure on credit card companies with regards to um, the amount of revenue they were bringing in from their transaction fees. So um, maybe Exodus will, with their diversification of income, with the exchange and the swaps and everything that they bring to the table, maybe they'll be able to um, offer some lower rates to for the transaction fees and credit.
If I had to anticipate what the next move for Exodus would be, it would be that they would acquire or become a stablecoin issuer.
Ooh, um, why do you think that would be the next move, and what do you think that would entail?
Because now they have the mechanism to become a stablecoin issuer. They have the banking side of it. If you think about what a stablecoin is, it's a mechanism for doing custody, because that's what's required. You have to take in assets and then issue crypto as a result of assets that are held in strong custody. Well, this is Exodus's bread and butter. The only thing they lacked was that ability to actually do the regulatory side of issuance. So now they have that.
If
And they're
they
one of the few companies that could actually do it correctly. If you look at a lot of the other stablecoin infrastructure plays, it gets really murky when you start to investigate whether they are really the right company to be doing the custody of those assets. It's been a real problem. I'm looking right at you, Stably.
don't bring that up. No, I it it may be that we finally see stablecoins being used to maybe get around I should say, as you describe that, I think, well, perhaps the future is not reducing the the transaction fee for credit companies, but making the second tier of stable coins for businesses to be using um, uh, to pass back and forth between their customers that have a much lower transaction fee. Um,
Well, Exodus has already been providing some access to ways to make money by parking crypto. So if you start to think about the user base in Exodus that has relatively liquid wealth, and most crypto being pretty liquid wealth, providing a mechanism whereby staking or putting certain assets into a custodial relationship and then allowing stable coins to be created off of that. This is a huge potential win for Exodus moving forward, because if you have people that are sitting on top of assets in self custody, but they aren't really putting them to work. Now Exodus starts to say, here's how you can put your assets to work, and it directly ties into stablecoin issuance. That starts to look very circular, and like Exodus can generate an exponential amount of revenue.
isn't that isn't that sort of what we would call a money market fund, or doesn't that behave in much the same way?
It starts to look a lot like that. Yes, that's exactly what you're doing with the money market. Is you're providing access to a interest infrastructure that's relatively safe, and we've seen lots of companies doing this. I mean, Apple is operating a money market account right now for anytime you deposit Apple Cash. This was their relationship with, I think, J.P. Morgan, where they started to become a bank. So I think big players start to look at this anytime you have money that's in your customers' hands and then it's coming into your app or your ecosystem. Starbucks is one that we've covered before as well that has a tremendous amount of this kind of thing. So as we start to see this stablecoin stuff become the du jour, I wouldn't at all be surprised to see somebody like Starbucks switch their infrastructure from being very insular and internally focused to using some kind of a broader token infrastructure to provide access to their internal rewards programs and gift cards. So I think that this is right along those lines.
So you're saying companies like Starbucks can participate in the money market fund and yet have a token um, that's related or pegged to um, the amount that they've invested into the money market.
Well, just that there are a lot of companies that are operating like money markets, like that when that was created, in the 80s or whatever, and the people wanted access to it because you had relatively liquid cash that's sitting near you, and you don't really want to just have it languish. You'd rather earn a little bit of interest while you're getting ready to do whatever, or it's that access to cash that you want to have near at hand where you have zero penalty to exiting from whatever the investment was and you're willing to take a lower rate for that. And Apple is doing that, and to my understanding, Starbucks is in some sense doing that as well, in the way that they operate some of their rewards programs. So what I'm trying to say is I think there are a lot of companies that are providing pseudo money market style returns and access to infrastructure, and it seems like that's the same kind of thing that Exodus will naturally be doing as a next step in this acquisition.
That is beautifully put, and I think you're absolutely right about it. So I don't know if you have anything else to add, but thanks for the news on Exodus, and I'm 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 intrigued. I hope we see more coming from Exodus.
That's pretty much what I wanted to say about Exodus, and it's been a lot of fun kind of dissecting and looking into the announcement and where it might lead Exodus. And we'll definitely be covering everything that happens with this acquisition as it comes out. So we'll see you next time on FOMO.